It's Tuesday and you're watching FreightWaves Now. I'm your host Anthony Smith, and coming up, Andrew Cox is going to give us a shipper update. But first, we're going to go to Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
And welcome to your Tuesday carrier update presented by PowerFleet. I'm Strickland. Let's check on these freight markets here and see what our volumes and our tender rejections are doing so we can figure out what's going on with capacity. So we've got our outbound tender volume index in green. We can see that volumes actually are trending a little higher here over the last 2 to 3 days, taking a little jagged path on up there. Similarly, here over the last day or so, tender rejection rates finally stopped. A 10-day precipitous drop in a row, bouncing up back over 24.7% for the first time in a little bit. So again, this is a 10-day sequence that we just paused. And again, if you look way back on October 10th, that increase on October 10th was very incremental. It was not a significant increase. You actually have to go all the way back to October 7th, where we did start our decline in earnest there. So again, it looks like we have bounced a little bit here. One day doesn't a trend make, but at the same time, it is interesting to see that volumes and rejection rates starting to increase yet again. Now, if you think about this and you do a little bit of the math on the rejection rate with the outbound tender volume index, you'll get to some accepted volumes, and the accepted volumes will actually be flat throughout this period, indicating that carriers are really just figuring out how to manage some of this capacity a little bit better over the last few days or few weeks, if you will. So again, capacity becoming a little bit more stable, a little bit more predictable as they do flock to some of these larger markets and cover those. Looking at our van and reefer rejection rates, so we can figure out how much of this is being influenced by van or reefer. We've got the van rejection index bouncing up, as well as the reefer rejection index bouncing up for the United States. So they're not necessarily moving in divergent paths. Reefer capacity and van capacity do tend to have a pretty good relationship. Both of them here showing a similar little one-day bounce over the last little bit, over the last day or so. So where in the United States are we seeing some of our rejections happening? It is not in the largest markets. Looking at our weighted rejection index here, the larger markets sitting down here in the negative weighted rejection index, combination of volumes and weekly change in rejection rate. You can see all these large markets sitting out there in the red on the map: Atlanta, Ontario, Los Angeles, Harrisburg, Allentown, Elizabeth, all the top 5 markets in the United States showing declines in the weighted rejection index, which means that their tender rejection rate is also on the decline as well. And there's the largest amount of freight happening in these markets. So a lot of carriers are now able to go into these large markets and manage the capacity a little bit better. We have seen this continue from last week. We saw the early stages of this middle of last week or so when we saw some of these larger markets really fall. So what does that mean? Since we saw a national rejection rate jump up, it means that the rest of the country is having trouble with capacity. So some of your smaller markets, not necessarily Joliet, Illinois, around the Chicago market there is one of the larger markets in the United States, but has been very soft here over the last, relatively soft, I should say, over the last several months. Roanoke, Virginia, leading the way on the weighted rejection index here. Again, Hutchinson, Kansas, Winchester, Virginia, Little Rock, Nashville, Tennessee, Erie, Pennsylvania. Some of these mid to lower tier markets in terms of overall volume are showing, significant increases in the weighted rejection index. Therefore, the capacity is getting a little bit more constrained in these smaller markets. Looking at Atlanta, Georgia on the declining end of the spectrum here, van and reefer rejection rates. You see that van is actually declining, but reefer holding a little bit stronger. So a little bit divergent here in the Atlanta market, the larger market. So if you're a reefer carrier, you still should have a pretty good amount of opportunity there on the spot market with reefer rejection rates at 33%. Van, however, still dropping dramatically. We've got a 21.16 van outbound tender rejection rate. On the other end of the spectrum, Roanoke, Virginia, smaller market, about a 0.61% market share value, showing increases significantly in both van and reefer rejection. So if you are in that area, check the spot market. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello and welcome to the Shipper Update. I'm here with Andrew Cox. Andrew, what's the latest?
Anthony, I've got a couple results from our most recent quarterly shipper update, or shipper survey rather. So this is the Q4 shipper survey, which we just completed a couple weeks ago. So this is the question that we ask them, this and the carriers each time, which is just their expectations over the next 3 months compared to the previous year for shipment volumes, contract rates, and spot rates. So I'll tell you a little bit about this compared to the Q3 numbers. Shipment volumes was about the same. So we had 41% of shippers expected higher shipment volumes in Q3 compared to Q3 last year, now just up to 49%. The biggest changes here were in rates. The overall biggest one was contract rates. So this doubled the amount of people expecting higher rates in Q4 compared to Q4 2019. It was 34% in Q3. And then spot rates, I mean, just incredible. 93% are expecting higher. I think it was somewhere in the 60s for Q3. But the most important question I think I asked to all shippers was, how long did they think it was going to be before the market normalized? And the way I know normalized is kind of a subjective view. We looked at it as when their acceptance rate is at or below the average total acceptance rate. And the biggest number here came out to be Q1 2021, which I've got some data here we're going to talk about from the driving schools, which gives that, makes it a little bit more believable. But overall, it's not going to be Q4. We've got a few more months of this tight market moving into next year.
And from these results initially, are there any surprises that jump out at you?
Not particularly. I mean, maybe that there's about 15% of people that think it'll be sometime 2022 or beyond before this market, normalizes. And I think that is what got me so interested in this driving school trainer. This is some new data from Stevens Research. There's been a lot of talk in the market about the driving training schools and the capacity constraints at those training schools right now. And overall, they surveyed 28 different driving schools throughout the country. 22% of those are still closed, either temporarily or permanently, which is a huge number. 32% of driving schools that were closed at some point during the pandemic but have resumed operation since then. And these two last numbers are the biggest of the report. 82% of schools that currently remain open reported some form of capacity constraint at some point. And then the biggest one here is 57% of pre-pandemic capacity is still restrained. They're only at 57% of pre-pandemic capacity. So you got to think that even though the pipeline is healthy, there's a lot of drivers signing up for driving school right now. There's just not enough trainers and there's not enough driving schools open right now to fulfill and add new capacity to the market.
Gotcha. So the capacity constraints are all throughout the supply chain, not just with current drivers, but even those trying to come online.
Yeah, exactly. I mean, the biggest takeaways here are that the industry is severely behind on new drivers to replace a lot of the either early retired drivers or retired and furloughed drivers that happened back in March. And that also it's going to be a long time before it gets sorted out. I mean, we're looking at sometime maybe middle of next year before we have a vaccine and widespread use of that vaccine. So we're going to see e-commerce demand. We're going to see goods spending continually staying up, moving through that point, and we're just not going to see capacity turnover. While we've seen a lot of trailers ordered last month, 52,000, the highest month on record. We're not going to see enough new drivers behind those seats to really relieve the capacity constraint in the market.
Excellent. So this is an informative study. Excellent as always. Where can people find more of this kind of information?
Well, we can always go to FreightWaves.com/passport. All of our research is there. I'm sure we'll be putting something out on this. Kevin and I are very excited about this topic. So stay tuned at FreightWaves.com/passport for all the latest.
We'd love to hear it. Thanks so much for joining us today, and thank you so much for tuning in. That's going to do it for this Tuesday edition of FreightWaves Now, but the content does not stop here. We're always streaming around the clock, so check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.